Hey everybody, it's Ken McElroy and Danille.
Hello.
So I'm super excited to have our guest, James Harris. So he's killing it out in California. And he's obviously, people probably know you, James, as $1 million listing. You've got a lot of fame and notoriety out there. You're selling a lot of really expensive homes to a lot of celebrities. And so I was excited to talk to you about the high-end market because, from those of us who aren't in a high-end market, a lot of your clients, former clients, future clients are, they're bouncing out into other markets and they're buying in other markets, all cash, with their equity. And so welcome, first of all.
Thank you so much and happy to be here and excited to have a chat with both of you.
So I know we talked about, you've sold homes that obviously the funny thing is you said as low as 1 million, as high as 120 million. So what's interesting about that is, in a lot of markets, and I know this is certainly not in yours, 1 million as your floor is a lot of people's ceiling. So, what's it like to, and I know you came from England and didn't know anybody. And also what's really cool is your partner, your childhood friend from England. There's a lot of cool dynamics and stories. So give us a little bit about your story, your background, and what you're up to now.
Sure. So, we started in the business, or I started in the business in London right out of school. So I definitely tell people that school wasn't for me. I didn't like it. It didn't get me excited, unfortunately. I wasn't academic, but I was always hungry to make money. And I just did whatever it took to kind of learn the market, learn the industry, learn how to transact. And in my first 2 years, I did residential. In my second 2 years, I did commercial. And then I moved to Los Angeles when I was 21. And we've had our business out here for the last 11 years. And you just never know who you're dealing with or what it might turn into. So we never turn our nose up at anything, no matter what the price point is. And we service each of our clients in the same regard. And I believe that's the best way of running a business in any business for that matter.
What did you see in 2021 that was much different than you'd seen previously?
A lack of sleep. No, in 2021, and look, really going back to COVID, I remember when COVID hit and it was around March time and I was sitting in my office looking at a computer screen, wondering if we were about to hit a similar '08 recession, wondering if I was ever going to leave my house and sell a property ever again. And I was terrified and didn't know where it would lead. And there was so much unknown back then. And then about 6 weeks later, it was like we came out of our house. It was like there was light, the world was still there. And then boom, it just took off. So really it incorporates 2020 as well as 2021. We've got these historic interest rates at an all-time low or extremely low. Borrowing is next to nothing for the buyers out there today. Inventory is incredibly low. But what's interesting through COVID is that buyers are realizing things about themselves that they didn't even know. The way they live, where their kids go to school, where they go to the gym, do they work from home? Is the husband and wife going to have two separate offices? Do you want more security? Do you want gates? Do you want a second home, a third home? The way we think has just changed so drastically since COVID that it's created this crazy real estate market. And then you think lack of inventory and low interest rates. And all of that has just created this pent-up demand, and the market has gone absolutely insane. So 2021 was a record-breaking year for us amongst many in our industry. And I think coming into 2022, for as long as rates stay low, I think we're going to see that trajectory stay the same and continue to rise. We'll see what happens. You guys probably track interest rates closer than I do, but it's certainly going to be very interesting to see what unfolds.
And have you noticed a big change as far as that with like inflation as well?
Yeah, I mean, the cost of living has gone bonkers. We all know that. Inflation is at an all-time high. I think if you look at it overall, the dollar is shrinking. The cost of goods and services are rising. The country is in tremendous debt. And the Fed just can't raise interest rates too fast, too quick. Otherwise, we'll end up in a similar recession as we did in 2008. So I think it's going to be a very interesting ride. The Fed have said they will raise rates 3 times, potentially up to 5 by the end of the year. And I just hope everything holds. That's my main hope here.
What are some of the things that you saw, like what priorities moved up based on your clientele? Because you deal with a very high-end clientele, even celebrity. How did some of their priorities change?
I think security was a big one right off the bat. People look at, okay, I'm going to cancel my gym membership. I'm not about to share the gym with 300 other people. So it's having an at-home gym. A lot of parents weren't necessarily thinking, oh, my kids are going to go back to school one day. So turning certain areas of their house into a homeschooling area. People weren't going to the office. So you were seeing big bedrooms change into offices. And now people are looking at homes with double space for office, double space for school. Again, all the developers that are now building ground up construction, they're now thinking differently about how they're building houses.
You're starting to see these, those were once before they were options, right?
Yes.
Now they're actually things that they're actually doing because they know that's where the market's shifted.
Absolutely. Not only are they doing those things, but people were converting bedrooms to gyms, bedrooms to offices, movie theaters to homeschool areas. You saw everything and anything you could imagine, and it was all in direct correlation to COVID. And look, things are getting better. And I'm just beyond joyed to see that things are getting better and the numbers are going down. But I think people are still thinking differently in terms of the way they live.
So as far as people moving and the shortage of supply, why do you think all of a sudden there was a short supply of houses? Even though there was one before, it seems like it's much more, pronounced now.
Yeah.
It's a great question. I think people aren't necessarily thinking about moving, the ones that own. They're not thinking about transitioning. They're thinking about holding. A lot of people couldn't even afford to hold, but the government put their mortgages on hold and they didn't need to make those payments. Therefore, they decided just to hold and not sell. But I think the inventory is getting better and the market is becoming more fluid in terms of transactions. But again, with these low interest rates, most of these sellers say, okay, well, I can sell my home today. What am I going to buy? And then they're in this big catch-22. I'm going to get this big number for my house. It's probably going to sell 20% over ask. I'm going to go into multiples. I'm going to get 15 offers. But what am I going to buy? And if you're talking to a family, I mean, it's a big question. We just sold our home and bought a new one, and my wife just wouldn't let me put our current home in escrow until we'd found a new one. So it is that catch-22.
By the way, smart wife.
Yes, indeed.
Yeah. It's let's find a home for our family before you list the one you're in. And I think that's kind of the issue. I found that because to your point, people are looking for all these things, but prices are going up. They have a lot of equity. But they're not really making lateral moves here, are they? They're stretching
Correct.
again. Would that be accurate?
They're very much stretching. Again, it goes back to low interest rates. People are scared that they're going to get hiked up. So if I'm a guy who can borrow $5 million, let's just say for argument's sake, I'm going to borrow that full $5 million right now because my debt on a 10-year interest only, I'm going to borrow in the 2s. Well, at the end of the year from now, maybe it's in the 3s, maybe it's in the 4s. So people are definitely trying to capitalize on the low interest rates.
So for those people, we get this question all the time, right? I'm waiting for the crash. I'm waiting to buy for the crash or for the adjustment. What do you tell them?
I got a client who's been waiting for the crash now for 9 years. It's really interesting. It's like we don't have a crystal ball. Nobody does. It's whether you're buying crypto, whether you're buying art, whether you're buying real estate. Nobody has the crystal ball, right? We all look at the same fundamentals. We're all listening to the same analysts, experts, professionals. I often say to people, certainly when they're looking for their family home. So I'm not referring to investment. I'm looking to family home, which is also an investment. You have to look at the next 20, 30 years. And then if I go back to 2008, when we had the economic subprime crisis, most people that lost their homes back in 2008 had very toxic debt. So the way I see it is if you can buy a home now, even if you're going to pay 10% over what you think it might be worth or 20% over what you might think it's worth, if you're holding it for the next 10, 15, 20 years and you have great debt and you can weather a storm no matter what happens, buy now and hold, because sales and real estate, it's all cyclical. We go up, we go down, we go through market cycles. And as long as you can buy, hold, and you're not going to end up giving the keys back to the bank, put your family first and don't think about the crash, because you're never going to time it right. And when it does crash, you're probably not going to want to buy then either, because then you're going to be trying to find the bottom of the market and it's just a bad cycle and you can't time anything perfectly.
I'd love to hear where you think things are heading, so people can kind of wrap their head around that.
So as long as you don't hold me to it, no. Yeah. So I'm a very, very half full glass kind of guy. My glass is always half full. So I'm a realist, but I'm always very optimistic. So if I were to give you my 2 cents, I think we're going to see the rates rise 3 times between now and the end of the year. I reckon we see a 3/4 point raise between now and, again, the end of 2022. I think inventory will become a little more available as the year goes on. I think that if we see rates go up, we hope that we see prices come down a little so that it somewhat evens out. I don't want to see the market keep going up. I want to see the market level off. I think we're already starting to see that. And I just want, the market to continue to remain steady. By the end of this year, I think we're going to see, again, rates up probably around a point, inventory more available. But I do believe the buyer demand will remain in place, and I do believe the market will remain strong.
And what's the best way people can reach you if they're interested in getting more information?
Absolutely. James@theagencyre.com is my email. You're welcome to reach out via email. I would also love comments, feedback, and thoughts on readtheblueprint.com. We're very passionate about it. It's definitely a passion project that we put a lot of time into, and we're going to continue to do so. We've heard nothing but great things so far. So hoping that we're putting out great content for the people to read, and hope you guys enjoy it. And feel free to reach out anytime.
Well, we will for sure. We come out there every summer, and so we'll reach out then.
It's been a pleasure talking with you both, and thank you so much for having me.
For sure, James.
Thanks,
Cheers.
James.